Hi, I'm David Buckland and welcome to this week's Video Insight. Today I'm being accompanied by Sean Sequeira, who's the Chief Investment Officer of Australian Eagle Asset Management. We're now halfway through the reporting season for the year to June 2023, and I thought today what we might do is something that's a little educational. Today Sean is going to run with Altium, ASX code ALU, and the Altium share price, for context, over recent years has traded between about $24 and $48. Sean, and today it's at the higher end of that range, but I just thought today could be a little educational, Sean.
Thank you, David. And what I did want to do today is kind of give you an idea of how we view stocks in relative to their history and why we think quality matters. And this is a perfect example. We have one stock that is not necessarily cheap. However, they have a very, very good market position, being the best at what they do in the world, as well as a management which has been consistent over many years in identifying what their aspirations are for the company and sticking to their growth targets each year, as well as maintaining a long-term growth target. And on top of that, where they want to strategically be within their market. Those things that we look at in terms of quality accumulate to give the company a higher rating in terms of how we view that versus other companies. You might have other companies that have the same earnings, but you won't value them as highly because they don't have the same history, the same consistency, as well as the same potential outlook. The outlook for Altium is to double earnings over the next 3 years,
and revenue, Sean, as well.
As well as revenue. So this is not a cost-cutting exercise; it's growth. And on top of that, what they've done in the most recent reporting season that gives the market confidence that they're going to actually that they will actually achieve their targets is that they attained a very large contract with a very, very large circuit or a chip designer in Japan, and that gives the company a lot of credibility. When large companies take large contracts from a company, it gives that the seller a lot of credibility, because very large companies can choose anything in the world, and they choose this particular company. It means that the product is of high quality, and they're the things that we'll assess to determine whether the company is of high quality and whether they have any credibility in attaining their long-term targets. And in doing so, it means the growth rates are very high. And beyond that, it puts them in a very, very significant strategic position to be able to be almost like the hub of the circuit design or the electronics design industry, which is a growth industry in itself. So it's like a network effect, and the value of those earnings can potentially grow beyond their initial aspirational targets.
Ladies and gentlemen, you've heard it from Sean Sequeira. Clearly, Altium has very, very exciting aspirational targets to double their revenue line and their EBITDA line over fiscal 26 relative to fiscal 23, so over 3 years. And there aren't a lot of Australian companies that can say that with any sense of confidence. So let's watch this ride and see if it does break out of that $24 to $48 range that's been in over recent years. And Sean, thanks so much for that little educational piece. And ladies and gentlemen, that's all we have time for this week. Please continue to follow us on Facebook and Twitter.